Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series GST Relearn part 14, and today we are going to discuss topic import and export under GST. So let's dive into it. Let me allow to share my screen. Import and export under GST. What we are going to learn. Let's have a introduction to import and export under GST. Import of goods, meaning and its scope. Import of services, definition and conditions, levy and collection of IGST on imports, valuation for import of goods, input tax credit on imports. Then we will move on to export of goods, meaning and treatment, then export of services, zero rated supplies under Section 16 of IGST Act, options for exporters, LUT or bond versus payment of IGST, refund of IGST or unutilized ITC on exports, deemed exports, import and exports through SEZ units. Then we will see a few practical examples and case illustrations, and then key compliance requirements and documentation. And at the end, we will also see conclusions that can be drawn from today's study. So let's start. Introduction to import and export under GST. Under the GST regime, taxability of transactions involving cross-border movement involving what? Cross-border movement of goods and services is governed by IGST Act 2017. Okay, means taxability of transactions involving what? Cross-border movement of goods and services is governed by which act? IGST Act 2017, that is Integrated Goods and Service Tax Act 2017. GST ensures what? Seamless flow of credit, avoids double taxation, and defines what? Treatment for import considered interstate supplies and exports treated as zero rated supplies. Let's see import of goods, meaning and its scope. As per section 2 subsection 10 of IGST Act, import of goods means bringing goods into India from a place outside India. Simple. What is mean by import of goods? Bringing of goods into India from a place outside India. Okay. The term India includes territorial waters up to 12 nautical miles. India includes territorial waters up to 12 nautical miles. Import is complete when goods cross the customs frontiers of India. Very, very important. Now, when import is complete, when goods cross the customs frontiers of India. Let's say example, a company in Chennai imports machinery. Machinery is goods from Germany. Okay. When the goods reach Chennai port and cleared customs, word used and when the goods reach Chennai, only when it reached Chennai port, import is not completed. When import is completed, when clears the customs, when the goods reach Chennai port and clear customs, it constitutes an import under GST. So very important term. India includes territorial waters up to 12 nautical miles, and import is complete when goods cross the customs frontiers of India. Okay. Let's see import of services. Okay. Section 2 subsection 11 of IGST Act. Import of services means a supply of any service where the supplier is located outside India, the recipient is located in India, and place of supply is in India. what needs to be fulfilled to cover under import of services? Supplier located outside India, recipient located in India, and place of supply is to be in India. When all these three conditions satisfied or met, then only it treated as import of services. Consideration is mandatory for a transaction to qualify as import of service, except in cases specified under Schedule 1 related persons. Means what is mandatory? You need to be, there should be a consideration. Only exception is related person that is mentioned in Schedule 1. So consideration is mandatory for a transaction to qualify as input of service. Means you can say like supplier is located outside India, recipient is located in India, and place of supply is in India, and also you consideration received. Okay, it is mandatory. Only exception is related person as per Schedule 1. Example, ABC Limited India avails consultancy from XYZ Incorporation USA. The supplier is outside India, recipient is in India, and place of supply, that is recipient location, is in India as per place of supply rules. So it will be qualified as import of service. Next, levy and collection of IGST on imports. On import of goods, IGST is levied under Section 3 subsection 7 of the Customs Tariff Act 1975 in addition to basic customs duty. Means basic customs duty is there as per Customs Tariff Act, but after that IGST levied under Section 3 subsection 7 of the Customs Tariff Act 1975. IGST is collected at the time of customs clearance by customs authorities. On import of services, tax is payable by the recipient under reverse charge mechanism as per section 5 subsection 3 of the IGST Act. In case of import of goods, IGST is levied as per section 3 subsection 7 of Customs Tariff Act in addition to the basic customs duty, and it is collected at the time of customs clearance by the customs authorities. And in case of import of services, tax is payable by whom? Recipient under the reverse charge mechanism as per section 5 subsection 3 of the IGST Act. Example, if IGST rate on machinery is 18% and CF value is 10 lakhs, then IGST would be 18% on 10 lakh rupees 1,80,000 payable at customs. Let's move on. Valuation for import of goods. How to value? Value for IGST computation is the aggregate of what? Assessable value under Customs Act, basic customs duty, and any other duties except GST. So value for IGST computation is the aggregate of all this sum, assessable value under Customs Act plus basic customs duty, and any other duties also should be added except GST. So let's see example, you will understand better. Assessable value 5 lakh, basic customs duty 50,000, total will be 5 lakh 50,000. So IGST at the 18% will be on 5 lakh 50,000, that will be 99,000. Let's move on next. Input tax credit on imports. ITC of IGST paid on imports is available to the importer if goods are used for business. Very specifically, it is need to be fulfilled. ITC when you will able to take the credit only when if goods are used for the business. Basic customs duty is not creditable. The importer can claim credit based on the bill of entry. The importance of bill of entry is here. You need, if you want to claim ITC, first that goods must be used for the business, and the second you can claim the credit only based on the bill of entry. Example, IGST of rupees 1,80,000 paid at import available as ITC in GSTR 3B. And now these are all up to the import. Now we will moving to export of goods. Hope you understood import factor, import of goods and import of services. how to value, how to tax it, how claim the ITC. Now we are moving to export of goods. Let's see its meaning and treatment. As per section 2, subsection 5 of the IGST Act, export of goods means taking goods out of India to a place outside India. Taking goods out of India to a place outside India is called export of goods. Export is treated as interstate supply and zero rated under section 16. Export is treated as interstate supply and also zero rated under section 16. No GST is payable on exports. Okay. No GST is payable on exports. Let's see export of services. What is the definition and key conditions? Under section 2, subsection 6 of the IGST Act, export of service means supplier is in India, recipient is outside India, place of supply is outside India, payment received in convertible foreign exchange or INR as per RBI rules, and supplier and recipient are not merely establishments of the same person. They should not be related. So all these conditions should be made to qualify as export of services. What are they? Supplier is in India, recipient is outside India, place of supply is also outside India, payment received in convertible foreign exchange or INR as per RBI rules, and supplier and recipients are not merely establishment of the same person. Okay. Now let's understand zero rated supplies under section 16 of IGST Act. Zero rated supply include export of goods or services and supplies to sales developer or unit. Okay. So zero rated supplies includes export of goods or services and also supplies to sales developer or unit. So benefits, no output tax, and refund of unutilized ITC or IGST paid on imports that are used in your exports. Okay, so benefits are no output tax and refund of unutilized ITC or IGST paid. These are the benefits of zero rated supplies. Let's see options for exports. Okay, that is LUT or bond versus payment of IGST. Two routes are available: export under LUT or bond without payment of IGST, claim refund of ITC on your imports if you are used in that export. Export on payment of IGST, claim refund or IGST paid. There are two routes. Either you need to file LUT or bond without payment of IGST, okay, and claim refund of ITC on your input utilization, and means other option is export on payment of IGST and then claim refund of IGST paid. So example, exporter files LUT and export rupees what 10 lakhs goods, ITC of rupees 1.8 lakhs accumulated, refund claimable under rule 89 sub rule 4. Refund of IGST or unutilized ITC on exports. Okay. What are the rules related? Rules 96, refund of IGST paid on exports through shipping bill. Rule 89 talks about refund of unutilized ITC under LUT and must file RFD01 electronically, okay, to claim the refund. Okay, Rule 96, Rule 89 and RFD01 form should be filed electronically. Let's understand what is deemed exports. Okay, certain supplies are treated as what deemed exports under section 147 of the CGST Act. Let's see example: supply to EOU, that is export oriented unit, and supply of goods against advance authorization are treated as deemed exports. Tax is payable, but recipient or supplier can claim what? Refund. So certain supplies are treated as what? Deemed exports under section 147 of the CGST Act. For example, supply to EOU, that is export oriented unit, and supply of goods against what? Advance authorizations will also treated as deemed exports. Import and exports through SEZ units, okay, special economic zone units. Supplies to SEZ treated as what? Zero rated supply. We already seen this, okay. Supplies to SEZ treated as zero rated supply, and supplies from SEZ to domestic tariff area treated as import for DTA buyer, okay. Supplies from SEZ units to domestic tariff area, that is in India only, okay, treated as what? Import for DTA buyer. Let's see now few of the practical examples and case illustrations. Okay, let's see example 1. Import of service under RCM. Messrs. Take India avails what? Server hosting from AWS Singapore. GST payable under RCM, that is RTC, available in the same return, and Take India will pay that IGST. Okay. Example 2. Export under LUT. Messrs. ABC exports garments to France under LUT. So ITC on inputs rupees 50,000 refunded after filing RFD 01. Okay. Means you have to file LUT. You are not paying the ITC, but the ITC on your inputs which are used in providing that export will be refunded after filing RFD 01 form. Example 3, supply to SEZ units would be zero rated. Messrs. PQR Mumbai supplies raw materials to SEZ unit in Gujarat. It will be treated as zero rated supply. Okay. I think it is clear to you. Let's see key compliance requirements and documentation. For imports, what is important? Bill of entry, GST and declaration, and payment challans. For exports, shipping bill, LUT or bond is also important. Invoice with supply mean for export under LUT or without payment of tax. And returns, GSTR1 table 6E is used for declaring that, and GSTR 3B, and refunds applications wherever applicable. And now we will see conclusions that can be drawn from today's study. Okay, recap of our study. Let's see. Unified treatment under IGST. Both imports and exports are governed by IGST Act 2017 to ensure uniformity in cross-border trade taxation and seamless flow of credit across the states. Imports classified as interstate supply. All imports of goods or services are deemed as interstate supplies, ensuring that tax accrues to the center through IGST rather than multiple state levies, simplifying what? Tax compliance. Tax liability on imports. For import of goods, IGST is levied along with customs duty at the point of import. For import of services, tax is payable by the recipient under RCM, that is reverse charge mechanism. This creates a level playing field between domestic and foreign suppliers. Then credit neutrality through ITC. Importers can avail input tax credits of IGST paid at import, ensuring that the tax becomes cost neutral when goods or services are used for business purposes. Okay, used for business purposes are important. However, basic customs duties continues as a non-credible cost to the importer. Exports treated as zero rated supplies. Very important. Exports of goods and services along with supplies to SEZ units or developers are treated as zero rated under Section 16 of the IGST Act. This encourages what? Exports by eliminating the tax burden. Very important for the exporters. Two refund options for exporters. Exporters may export under LUT without payment of IGST and claim refund of unutilized ITC, or export on payment of IGST and claim refund of IGST paid. Both routes ensure that taxes do not block the working capital of exporter. Encouragement to SEZ and export oriented units. Supplies to SEZ are treated as zero rated and supplies to export oriented units as deemed exports, providing what? Liquidity and exports competitiveness for such entities. Clarity in determination of place of supply. The definitions of imports and exports hinge on the location of the supplier, recipient, and place of supplier, removing ambiguity and enabling what consistent treatment for cross-border transactions. Documentation and compliance are crucial. Proper documentation such as bill of entry, shipping bill, LUT, and refund applications are essentials to claim credits and refunds. Errors in filing may lead to what delays or rejection. So documentation is very important. Policy objective tax neutrality in trade. The GST framework on imports and export is designed to ensure what that taxes do not form part of export cost and do not disadvantage domestic business competing with imports. Easy of doing business and global competitiveness. By simplifying tax structures and enabling refund input taxes, GST supports what India's position in global trade, ensuring that exports are tax free and imports are fairly taxed at par with domestic production. Ongoing reforms and clarifications. The GST Council and CBIC continue to issue notifications, circulars, and clarifications to address what practical challenges and such as refund processing, valuation disputes, and SEZ supplies, showing dynamic and evolving tax framework. Okay. So this is for the today. Hope you have learned something valuable. So be connected to Tax Guru YouTube channel to learn like this and also recent updates. So if you are not yet subscribed Tax Guru YouTube channel, then do subscribe it for the latest updates for such videos for the learning. So if you like this video, also please click on like and do share in your network so the mass will get this knowledge. So be connected. If you want to suggest anything observations, so do connect with me, comment below the video. If you want any type of any question query, you can type as a comment. We will definitely get back to you. So stay tuned, take care, bye bye, Hare Krishna.